Okay, gentlemen, sorry it's a little bit late. Um, this screencast is going to be on the General Journal. Um, so basically, we've got all these special journals um, that we can use for all to I suppose group all like transactions in the one area, and then we can summarize it and move that information directly into the general ledger in a simplified or summarized form. So we've got any purchases of stock made on credit, they go in the purchases journal. Any sale of stock made on credit goes in the sales journal. Any transaction involving cash entering the business goes in the cash receipts. Any transaction involving cash leaving the business goes in our cash payments journal. Now, basically, that's fantastic for all those transactions, and those transactions will cover probably 90% of the transactions that happen in a business. But for everything else, there's Mastercard. No, for everything else, they need to go into the general journal. So some examples of that are as follows. Yeah, so an example of that would be something like if a transaction doesn't involve cash or did not involve the purchase or sale of stock. So, for example, if the owner, so what happens if the owner contributes her own vehicle to the business for business purposes? This is neither a receipt nor a payment, and nor is it a purchase or a sale. So let's just keep that in mind as we sort of go through. The transactions obviously still need to be recorded before they're posted to the ledger at the end of the month, but they can't really be recorded in any of the special journals that we've had a look at. So basically, what we've got is unsurprisingly, it's called a general journal, and the general journal is basically an accounting record used to record infrequent non-cash transactions which cannot be recorded in the special journal. So the types of transactions that we're talking about here are as follows. You're talking about commencing entries, which we'll have a look at in just a sec. Non-cash transactions with the owner. So that's a contribution of as we were talking about before, like a vehicle or an asset. It's also a drawing of an asset as well. So if the owner was going to take back or take home stock or something like that, for example, that would also go through the general journal. The other two transactions we'll have a look at in this chapter are bad debts and correcting entries as well, but we'll have a look at them sort of later on in the week. These last three, so the use of stock for advertising purposes, closing entries, and balance day adjustments, we're going to have a look at later on later on next term. So we won't sort of worry about those too much. So if we can just knock over the review questions now, 7.1, just quickly, just to get your notes up to date, and then we will move on. Okay, so now that we've had a little bit of an introduction to general journals, we'll just have a quick look at the format. Really straightforward format. Probably, well, it's going to be a lot easier to I suppose, learn compared to some of the special journal stuff that we've been doing. So basically, this is what the general journal looks like. We've just got date details, which is basically we just write. So in the details section, we just write the name of the general ledger account affected. Which is not obviously not a particularly difficult task. So then for each transaction, obviously there'll be a debit of that transaction and a credit aspect of that transaction, obviously, because we're using the accrual method or the twofold effect method. So that's obviously needs to be recorded there. So as with any transaction, the key thing to remember is that obviously the debit and the credit columns in the general journal um, obviously need to equal. Otherwise, the general journal is going to be um, out of balance, and then obviously won't be able to get posted to the general ledger correctly. So, if I just draw your attention to this subsidiary ledger situation here. Basically, the subsidiary ledger only needs to be used when it's going to affect a subsidiary ledger, when the transaction is going to affect a subsidiary account. Either debtors, creditors, or stock, basically. This is going to come into effect, only used when so the subsidiary ledger column's only used when the transaction is going to affect the subsidiary account. So that's either a subsidiary account, so either debtors, creditors, or stock. Now this will come into effect when we start looking at bad debts, which is later on in the chapter. Now the last little thing that we need to have a look at, and it'll become clearer when we talk about the example that I'm just about to go through. Next thing we're moving on to is narration. So because the general journal records a wide variety of transactions, it's really necessary to give a brief description of the transaction immediately after we've recorded the debits and credits. So this basically just tells us the story of what's happened, and also you need to note the source document that's involved. Yeah, but that will become a little bit clearer later on when we go through the example. So if we can knock over review questions 7.2 now, that would be fantastic. And then I'll just do a quick example of commencing entries. Okay, so commencing entries. Basically, this is the first time a business moves into double entry recording system or is established. That will generally be the first time the general journal has been used. So if the firm has been sort of operating for a little while as with the single entry accounting method, then these transactions, the commencing transactions, will be the balances of all the accounts. So we're talking about opening and establishing ledger accounts for any existing assets, liabilities, and owner's equity items. So this might happen as the business is just starting, so when the owner's contributing the starting capital, or as I was saying before, when the business has been operating for some time already, and then the owner decides to switch from single entry accounting to a double entry way of recording things. So if we have a look at the example on page 146, Jay Peto is the owner of Toy Bonanza, toy shop that has been running for 3 years on the single entry recording system. On July 1, 2015, he's decided to adopt the double entry accounting system, and these are the assets and liabilities of the business at that time. So what we need to do is record these transactions in the general journal as obviously as the debits, which are the assets. So bank, stock control, and vehicle. We can see that there. So let's move down from there. And then the loan and the GST clearing, which is they're the liabilities, obviously the credits, and then we have balanced it off there with the capital that the owner has contributed. Now, this is what I'm talking about here. in terms of the narration here. So commitments of double entry accounting records, memo 1. So that information is just capturing or telling the story of what we're recording here. And from there, quite simply, we basically just post the balances down into the down into the general ledger accounts as per normal. Now the subsidiary ledger accounts, it's virtually exactly the same. So as dealing with the normal sort of subsidiary ledger accounts and through the sales journal or the purchase journal or the cash receipts or cash payments journal for that matter. So basically, we've just got a bit of an example here where you have some information on some outstanding debtors, as well as some information on some outstanding creditors. So what will happen is we'll have a situation here where the debtors control is obviously what's going to appear in the general ledger, and then over here we'll have the detail of the debtors that will end up in the subsidiary ledger. Now notice that the subsidiary ledger doesn't necessarily need to balance at this stage, does it? Obviously, because it's just a summary of what is actually going to go into the general ledger. And the same here with the creditors control. So you'll notice that this 8,300 will equal, if we add those together, that'd add up to 8,300. And then as we go through, again, the narration there. So the next step in the process is then obviously moving those transactions through to the general ledger with the cross-reference of just balance, and then again through to the subsidiary ledgers. So if we can knock over review question 7.3, and then we'll be ready to go for Monday afternoon. Good on you boys, have a good weekend.